Two Cathie Wood fintech stocks taking it on the chin today, Block and Coinbase. Hindenburg Research, the short seller behind Nikola and Adani's fall, put out a big report this morning alleging that Block allows criminals to operate with lax controls and inflates Cash App's performance. Take a look at this chart. Block became a Wall Street darling largely due to the success of that Cash App. PayPal's Venmo pioneered a new, simpler interface for peer-to-peer payments, but it was Square's Cash App that seemed to come out of nowhere, climbing the App Store charts, better profitability, and this cool factor that became a kind of phenomenon in hip-hop culture. Hindenburg, though, says that Block won those advantages through flawed and murky means. Founder and CEO Jack Dorsey, he often talks about his mission to serve the under and the unbanked. Hindenburg says, yeah, that's true, but they embrace a specific segment of the underbanked. That would be criminals. Dorsey often points to how hip-hop artists rap about the Cash App. Hindenburg points out that those songs often talk about how they use the Cash App in scams to traffic drugs, even pay for murder. Now, the short seller also knocks its profitability, saying that it's fueled by avoiding a key banking regulation meant to protect merchants. Also points to accelerated losses at Afterpay post Block's $29 billion acquisition. So Block responded pretty hard, quote, "We intend to work with the SEC and explore legal action against Hindenburg Research for the factually inaccurate and misleading report they shared about our Cash App business today." Hindenburg is known for these types of attacks, it says, which are designed solely to allow short sellers to profit from a declining stock price. Now, as I mentioned, Nikola and Adani were other investigations from the firm that did result in share prices staying lower. Coinbase, meanwhile, was the other story in fintech today. It was hit by the prospect of potential securities charges around an unspecified portion of its listed digital assets. And Mike, if I'm going to try and take something out of both these stories, really, it's that they speak to the disruption that fintech has promised for years, that I've covered for years, and how that may not ultimately work out in their favor. And especially at this moment, it feels like people are questioning their valuations, of course, as well, because of some of these so-called disruptions that haven't really shaped up.
That's right. And in fact, as I mentioned before, it is in the downturn seems more fin than tech. I mean, it's kind of the old business, and they've tried to make something new about it. Now, the other thing that strikes me that does seem to unify these companies, aside again from them both being big holdings of Cathie Wood and ARK, is they sort of reflect or embody that kind of startup, like, look, let's grow. Let's do what we can to grow. There might be some regulatory constraints around here somewhere, but we're just going to have to get big and worry about that later. And in fact, with Coinbase, you've heard some comments by them saying, look, the rules weren't clear from the SEC, so we just kind of, allowed these things to list on our platform.
Mike, the age-old adage here in Silicon Valley, move fast and break things, right? That's still very much part of the ethos here. And that's what sort of Brian Armstrong, which you're referring to, the CEO of Coinbase, kind of striking back hard and saying we need to do these things. And the regulators are getting in the way, and that could set back a whole industry. But that's a lot of what people are talking about now. That adage, move fast and break things, does that work in this kind of environment when markets, investors are caring more about profit than they are about that top-line disruptive growth?
Yeah, and we are about 2 years into that reckoning process, I guess. I guess the other saying is, it's better to seek forgiveness than ask permission. That's what these companies in some ways sought to do. Dee, great to talk to you. Thanks so much.